Hello and welcome. In this video, we will learn what a stock split is. Alright, let me take an example. There is this cake in a bakery, and this cake costs rupees 100. Okay, the price of this cake is 100 rupees. I want to buy this cake, but I am not able to afford it. 100 rupees is too much for me. Alright, the cost of the cake is 100 rupees, but I do not have 100 rupees. I cannot afford 100 rupees. And also, I do not want the entire cake. I just want a piece of it. But there is no option for me to buy only a piece from this cake. I have to buy the entire cake only. Okay. Now the shopkeeper waits for some time, and everyone who comes to the bakery sees that it is an entire cake which costs 100 rupees and leaves the bakery without buying it. This is because for them also 100 rupees is more, and they also do not want the entire cake. Okay. This situation doesn't help the baker or shopkeeper too. Now, after waiting for some time, the shopkeeper cuts the cake into 10 pieces. He cuts the cake into 10 pieces, and then he prices each piece at 10 rupees. Okay. So one full cake of 100 rupees is split into 10 pieces of 10 rupees. Okay, 10 rupees each. So 10 multiplied by 10 is 100. Okay. Now I am able to buy it. I can afford 10 rupees and I want only one piece. Alright. If someone else can afford 20 rupees and if they want only two pieces, they can buy that too. Alright. So people come and buy the cake, and all the 10 pieces are sold. The shopkeeper is happy. Alright. By splitting the cake, he was able to sell the entire cake. And this is what a stock split is. Okay. Now let us go to the stock example itself. Let us consider the company which produces oil mill. Alright. Let us say that the stock price is 100 rupees. Meaning, if you want to buy one stock of the company, you will have to pay 100 rupees. Okay, that is the market value. Let us say that the face value of a stock is 2 rupees. Alright. And let us say that the company announces a stock split ratio of 1:5. Okay. Now let us assume that you have 10 stocks before the announcement of the stock split. Okay. After announcing the stock split, after the stocks are split in the ratio of 1:5, you will have 50 stocks. Okay. What does this ratio mean? This ratio means one stock is split into 5 stocks. One cake is split into 5 pieces. Okay. So you have 10 shares. 10 shares are split into 50 shares or stocks. Alright. Now, what is the impact of a stock split? Before the stock split, price at which the stock was being traded is 100 rupees. And total number of shares in the market is 4,000. I am considering the same example that I had considered before. Okay. The example of the oil mill. Promoter A has 2000 shares, promoter B has 1000 shares, and the public has 1000 shares. Okay. Value of total shares is 4 lakh rupees. 4000 multiplied by 100, 4 lakh rupees. Okay. Now this is before the stock split. This is before the stock split. After the stock split, total shares in the market is 4000 into 5, 20,000 shares. Okay. One share was split into 5. So 4000 into 5, 20,000. The total value cannot increase. Okay. Total value cannot increase. So the new share price is 4 lakh rupees divided by 20,000, which comes to 20 rupees. Alright. Now here, face value of the stock also reduces in the same ratio. Meaning, the 2 rupees face value becomes 2 divided by 5. 0.4 rupees. Okay. This is the difference between bonus shares and stock split. In bonus shares, the face value of the share or the stock doesn't get affected. Whereas in a stock split, the face value of the stock or share reduces in the same ratio. Alright. Now let us come to your case. Let us say that before the stock split, you had 10 stocks or shares and price of each share was 100 rupees. So the total value of the stocks that you owned was 1000 rupees. 100 multiplied by 10. Okay. And after the announcement of the stock split, you had 50 shares or 50 stocks. Each share or stock was worth 20 rupees. The value of total stocks remained the same because 50 multiplied by 2 is equal to 1000 rupees. Alright. Now the question, how does this stock split affect you? Right when they announce a stock split, it doesn't affect you at all. Because you can see you had 1000 rupees worth of shares. Now you also have 1000 rupees worth of shares. It is the same condition. But when it will matter is when the price of the stock moves up. Okay. Now you have 50 shares instead of 10. And so that many times your wealth gets increased. Okay. So the definition of a stock split is this. A stock split is a corporate action in which a company splits the shares of present shareholders to increase the number of outstanding shares. Okay. What is the purpose of splitting shares? Well, there are a few. Okay. The purpose of a stock split is to make buying stocks affordable to investors. Taking the example of the cake, if you have one big cake which is priced higher, then you have fewer buyers, right? Whereas if you cut it up into small pieces of lesser price, you have more people buying it. Now, here in the stock market also, if a stock is very costly, then finding buyers for it will be difficult. So, what does the company do? The company splits the big stock into many small pieces to attract customers, or in this case, investors. Okay. When the price is less, you have more investors buying the stocks. To make it affordable, they split the stocks, and when the company has more shares, more investors would come in and invest in the company. Okay. And since more shares are in circulation, it means higher trading volume, which improves liquidity. All right. Companies often split their stock when they believe the price will continue to rise. Now, this can be considered as a positive signal that the management is confident in future growth. Okay. Next is that since stocks are split, they are available at low prices. Lower share prices can attract retail investors. Now, this expands the shareholder base. All right. Next is that investors may perceive a split as a sign of strength, even though it doesn't change fundamentals. This can boost investor sentiment and potentially drive demand. Okay. Basically, a stock split is splitting the stock. A bonus share is issuing extra shares. The face value in a stock split reduces, whereas in bonus shares, it remains the same. All right. So I hope you have understood the concept of a stock split.